Welcome to the January issue of Trading Japan's Energy Markets, sponsored by my good friends at JPX. In this issue, I wanted to highlight something that I talked about in my first video back in August, September on these topics, and that has to do with METI's approval of market-based pricing, which for the rest of you outside of Japan, that's the normal pricing model in the US, UK, etc. But in Japan, it's brand new. And as suspected, it's going to change a lot of things, or it has already started to. So last month, in December, Skipping Stone surveyed both the supply community and the large end-use community, the industrials, if you will, or what's known in Japan as the GX League. We did the survey to gauge what the supply and demand side of the communities are viewing market-based pricing and what's the impact. And further, what's that mean to TOCOM JPX's futures market, which was we had predicted back in the fall would see a dramatic increase, which of course we're already starting to see. So let's take a look at the results. So let's start with what do the big customers want, the investors, if you will. So this is somewhat interesting. Of course, fixed price, that's an obvious. That's what they're used to seeing, or what the utility tariff looks like. But interestingly, the utility tariff was on the small side. The two most popular, of course, for fixed price, and then a fixed price for the base amount of load with a variable or market style price for the variable part of the load. In the US, this is known as block and index. We'll see if that name takes hold in Japan or not. But bottom line, either one of those products is going to require and does require hedging, hence the futures market, which is good news for TOCOM. So the other interesting thing about these two most popular, in the US, these are also the most popular products. So it kind of indicates that amongst the industrial crowd globally, because we see this UK as well, this is what they want. In Japan, they have not been able to get that until now. So let's take a look at what suppliers are doing. The first thing that jumps out at you is a lot of them don't know. Now, you're welcome to get the full survey from us. Happy to hand all the results out. Because one of the things it indicates is about half the suppliers in the market currently don't even plan to offer market-based pricing, and a variety of reasons as to why not. So we only limited this response, or this particular chart, to those either already offering market-based pricing or are planning to. You can tell that a lot of them don't even know what they want to offer, but they're planning to. So among those that are, the three products that you see in the red box all require futures markets or hedging. Also good news for TOCOM and their volume, which will go up. So the most popular one offered by suppliers is not surprising. It's just a pure pass-through of whatever the spot market or real-time market is, a pass-through of JPX, if you will. That's the least popular product amongst industrials in the US, and I suspect it will be the least popular also in Japan, because you simply can't manage cost as a customer that way. Anyway, we'll see how that shakes out. We're going to do this survey again in another year, see how the consumers are taking to it, what suppliers are doing. But bottom line, also in a year, I want to see how dramatic the increase on TOCOM futures and hedging has been. So with that, that's the data and the insights for this month. Thanks for watching.